Hey, what's up everybody? Welcome back to the channel. So today we're going to talk about IPOs and we're going to talk about SPACs. And simply going to ask the question, should you invest in a SPAC or should you invest in an IPO? Should you invest in either? Or should you stay far away from them? One of the reasons I want to talk about this is because a lot of times when people are talking about these things, they kind of regurgitate a lot of information, but not really give a good reasoning to why they're saying this. Because the reality is, even though we may have some things that are true, they're only true in part. And when things change and times change, you also have to adjust your knowledge and also have to make adjustments around that and how you see things and how you evaluate things. Now, I love having these discussions. And one of the reasons why is because you can actually dissect and look at things a little bit differently and look at things according to, your particular taste and what you're trying to do. And I love being able to teach you guys about how to just think and not just listen to information, but actually develop thoughts for yourself. Because if you can develop thoughts for yourself in investing, you can do that in business, you can do that in investing in real estate, etc. Because not all things are always the same. And sometimes you have to be able to use some wisdom and be able to think your way through a process or think your way through an investment because, there may not be any direct information out there to handle that. So one of the things that I'm working on is I'm actually working on a course to be able to help people to just really understand and think when it concerns investing versus just being someone that's just kind of, going with the herd mentality or just someone that's, investing out of fear. In the description below, you're going to find a link where it says josephfountain.com/subscribe. Click on that and sign up so that way that you can get information once I start to release these free products as well as these courses. Also, while you're down there, don't forget to like and subscribe. On this channel, we like to talk about money, we like to talk about finance, we love to talk about investing. We love to show you how you can succeed no matter if you have money or if you don't have a lot of money. It doesn't matter. You can still have success financially. All right, guys. So should you invest in IPOs and should you invest in SPACs? All right, so let's go with the IPOs first. If you search online for information about IPOs, you're going to hear everybody saying the same thing, and the answer is no. And if you've heard the information before, then you know that it's pretty much valid because a lot of times when you get into an IPO, the price gets driven up because of the investors before it actually hits the public market, and that price can be driven up and even doubled. So by the time you buy it, there's going to be some type of sell-off, and that's true. However, let me give you a few other ways to take a look at this thing and see if, should you really invest in an IPO or not. This year has been a pandemic, but this year has also been the year of IPOs and SPACs. And one of the things you're seeing is more IPOs starting to come to the market. So with the IPOs, does it make sense to invest in an IPO or to wait? Most people say, just wait because it's going to be a sell-off, and that's true. In fact, there's going to be maybe two sell-offs that'll happen when you see an IPO come in. You'll have one sell-off that happens when people buy into it, and it goes up and goes up, and those that have been trading it, that have made some money, they'll just pull out, or short sellers will pull out. And then you have it where those that have been invested in the company, like meaning those who were invested in the company when it was privately. So let's say, for example, you have an IPO that hits the market and it's $100. Well, a lot of those that have been invested in the company privately, they're actually got a much cheaper price. That price could be like $50 or it could be like $10. And so once it goes public, they're excited, but most cases they can't sell just yet. And normally they have to wait 3, 6 months or a year before they can make a sale. So once they're able to sell some of those shares or sell all of it, that's a big payday for many of them. And so that's also going to be another time where you see a sell-off where people are deciding to say, hey, I made 100,000, I made $1 million, time to take some profit. If you've ever heard the story of like Microsoft and Google back in the day, that when they went public, they had several of their employees who became millionaires because they had private shares. They had privately owned shares of the company for years, and the company had allowed them to be, vested in the company and things like that as they were a startup and as they were building. Even about one of the stories of a gentleman, I can't remember his name, but I used to tell the story all the time, to where he was an artist, and I think it was Facebook that he actually did a lot of artwork on it, and he asked them for, shares in the company while it was private. They instead of them paying him, he instead took privately owned shares, and once Facebook went public, that gentleman became a millionaire. And I can't remember how many millions it was, but he became a millionaire literally just like that. So that is something that actually exists behind the scenes. A lot of people don't know. So when a company goes public, you're gonna have people start to sell off and take some money and get that payday, so they can do whatever they want to do, or they can start a business or whatever people choose to do with their money once a company goes public like that. But that happens. So you're gonna see the stock price drop. So yes, I don't believe you should ever rush into buying an IPO. I do believe sometimes you should take a look and just kind of wait and be patient and see what's going on, as well as I do think, it depends on why you're investing in the company. So I'm going to give you a good example, and I love to use this example because it's very real and it's real for me. So I actually invested in Facebook once it went public, and I got in at shares of like $32 to all the way to $35 per share. Yes, it's about a $300 per share company, $260, $270 per share company. But my reasoning for jumping into the IPO was not based off of hype or anything. It was simply based off the fact that I understood where social media was going. I have a digital marketing company, so of course social media is a big part, and if you're living in today's society, then you understand how huge online and social media is. So my ideology, or why I decided to jump in when it first went public, wasn't because I was rushing. It was because I believed in social media and I believed in what Facebook was doing. So I got in at $32 and $35 a share, because basically I was holding Facebook long, and I still own most of my shares today because that's what I believed. Now what happened was, some months down the line, Facebook actually dropped all the way to $18 a share. What y'all think I did then? I bought some more. I didn't worry, I didn't panic. See, I don't look at things on a micro scale. I look at things zoomed out on a bigger scale, because my thing was, like I said, I was investing long term. So I knew that social media was going to continue to evolve. And if you looked at any numbers, anybody knows that. But if you're listening to all these old analysts and people off of Wall Street who they're all about just quick returns and the good old days business models and stuff like that, then you would think that, I need to stay away from social media, because the hype around Facebook was that this company is not profitable, don't waste your money, yada, yada, yada. See what listening to the noise can do? It can cause you to miss out on great investments, because you're listening to people that don't even understand the market. Okay, but anyways, so now in that you saw two different things. You saw me investing in the company because I believed in it long term. So if you believe in the IPO long term, then you know what? It's okay to invest in it when it first comes out, and you're gonna ride the wave. Now, if that's what you're okay with, because you believe it's gonna be around for 2, 3, 5, 10, 20 years, then that's okay. But if you're just looking to trade it, then you might want to wait. If you're looking short term, then you might want to kind of tread the waters a little bit more, slowly, because there's going to be several times that the company's going to pull back once it IPOs. Now, it could run up and then pull back some and still be higher than the opening, or it could run up and drop below what it was when it opened. So it's more about why you're investing in the company. If you're looking for a quick buck, then more than likely you might find yourself in a position where you buy into a company and then you lose money, because you're just looking for the short term. And then if you're emotional about it, in most cases you're going to sell when you see it going down instead of being patient. So yes, you should wait. However, if you believe in the company is going to be long term, then hey, go ahead, do your thing. There's nothing wrong with starting to invest in it once you see it come out, and you just adding more shares to your position because you believe it's going to be higher anyway. Now, one of the things to understand with IPOs and the prices that they come out with is a lot of times you have these companies giving these high valuations, and one of the reasons is because they just want to make money. Because when an IPO comes out, that means people are going to make money. Somebody's net worth is going to go up by the tune of billions and billions of dollars. It happens just about every IPO, and sometimes that is the push behind IPOs and their price, that people, they just want to make money. So we need a higher price, because they're looking at their portfolio. They ain't thinking about you or the value that comes to you. They're thinking about, hey, I want to make money. So if I'm a CEO and I have a certain amount of shares and it goes public, and then boom, I make what? $30 billion, $2 billion, however much money I make, that money comes to me immediately, and then I have the option to be able to sell off. As we've seen, which has been very controversial with, I believe it's Trevor Noah of Nikola, that once that SPAC approved, he sold a lot of his shares and bought like a $30 million house. Y'all, I'm not even going to speak on that. I ain't going to touch, but I think you get the picture. Now, speaking of SPACs, now the difference between a SPAC and an IPO, and this is just my assessment of it, it's not necessarily the totality of it, but this is my assessment. So with IPOs, those companies are more proven. They've been running for some time. They've actually got customers, they actually got a big business base, etc. Now with SPACs, that's not necessarily the case. Not all SPACs are like this. Some SPACs, as we see, some that have recently came out, they've actually had a pretty legitimate business for some time. You know, just that transition to IPO to become an IPO, they probably just didn't choose that because of all the strings attached to that. They chose to do a SPAC maybe because it's maybe easier for them, whatever the case is. But most SPACs are like startups. They're like investing in companies that, you know, have no products. They have not proven anything. They just have a presentation. They have good renderings. They have ideas, and they're working on stuff. It's rare that you see most SPACs have actual working products. Now, again, if you choose to invest in a SPAC, then you're investing in most of them, like I said, a theory or an idea or a possibility versus investing in something that's proven. Now, for me, I actually like the market of the startup market. Like I've talked about it before on my channel, like with different companies like Micro Ventures, Seed Invest, and things like that, and other companies that actually house everything in there, like New Chip and things like that, where you can actually invest in a company in a startup phase where they're looking to raise money, and you can be a part owner, a very small part owner in the company, in hopes that maybe it would do well. So just imagine if a company like, let's say, Uber came to you and said, hey, would you like to be an investor with us? This is what we're planning on doing. And you put some money in, and then look at you now, you've made so many millions and millions of dollars. Those things are very possible in that market, but it's rare. Ultimately, you're investing and you don't look to see a huge turnover immediately. So with SPACs, you have to take that in consideration also. So with some of the companies that, you know, are legit, not the ones that aren't, that have a little struggles, the ones that are legit, sometimes the information around them in just the last 3, 4, or 5 months, it's a little bit too harsh on the company. And the reason is because it's a SPAC, it's a startup company, it's a theory. You chose to invest in a company that just had theories and ideas, but nothing proven. So you can't be mad if you're not seeing certain things happen. Most of those companies aren't slated to generate anything for like years down the line, but you're getting access to it now. When you invest in a SPAC, you're not investing in the company for right now. You're investing in the company for years down the line. And that's most SPACs. And that's how I understand it. And maybe that's a good way you could probably think about it too. Because the IPO process, you're not going to get no theories and things like that. But with SPACs, that's what you get. Now me, I love all of it. So I'm always looking into just about everything. And I have my own reservations and thoughts about what I would take, invest in and what I wouldn't. But that's just what it is. So ultimately, you have to be able to make these decisions based off of you and what you're looking for, and even some personal interest where you can have a little fun around, investing. So for myself, like I love green energy, energy efficiency. So all of these, electric vehicles coming to the market, I love it. I'm not investing in all of them, but I just love it because I just love that market. So of course, I'm doing my studying and paying attention and seeing what's available and what I can get in on. Not looking for the next best thing, but looking for a good, solid investment that's going to make sense down the line. So tell me your thoughts about investing in IPOs and SPACs, and tell me what you think. All right, guys, if this has been helpful, hit that like button, stick around, subscribe, and I'll see you guys on the next video. Y'all have a good one. Peace.